Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, we are going to be talking about the easiest swing trading strategy that I've used over the past 7 years of trading. We're going to be talking about the two positions that we just took profit on today, so I hope you guys all enjoy it. If you guys do, hit that like button, subscribe, and if you guys want to learn more about swing trading and trading in the market, check out our school. It's fantastic. We have private live streams, quizzes, lectures, a group chat, but more importantly, we actually teach you to trade. It's not a get-rich-quick scheme. It's not alerts or anything like that. It's honest strategies that I've learned over the past 7 years of trading. So check it out down below, and we have an awesome sale going on for 50% off. Use code BEGINNER to get 50% off. So at the checkout, code BEGINNER, you guys will get it. So make sure you guys check it out, and guys, let's jump into this here. So, all right, so over the past week here, we did take a variety of trades. We took a trade on Nvidia yesterday, covering profit in a single day. We were up $1,300. Yesterday, before the market closed, we sold out about 60% of our money. Now, the reason why we did that is because we were up over 7% in a single day. In a single day, that's crazy, right? I always say if you guys are making 3% per month, you are better than 95% of all traders in the world. So yeah, me being up 7% on Nvidia, you guarantee I took profit. I covered profit on that. Now, the reason why we didn't sell out, of all the position, I'll be completely honest with you. I thought there was a chance it could go even higher. Obviously, I was wrong because it did hit some resistance and get some sell-off today. So, yeah, we kind of missed selling at the peak top in the trade. But in hindsight, I'm very, very happy, with over $1,000 profit on that trade. So let's actually turn to the computer and see those two trades. All right, so the first stock here is Nvidia that I want to talk about. So with Nvidia, one of the main reasons I honestly entered this position was because we had this huge sell-off of literally 17 to 18% in a single trading session, which is one of the largest single-day sell-offs Nvidia has ever seen. So I often think any action in the market is often an overreaction. And obviously, we bought in here, honestly, we bought in when that market opened the following day. We missed the peak buy. I was hoping to get in on the previous day's low at like $16, $17. We got in near and around $18, which is good. So here is our handy dandy. Let's go ahead and pull it up here. Our handy dandy swing trading journal that I absolutely love here. So this past trade here, where are we at? Nvidia here, sell-off trade, average cost is $18.91. So obviously it wasn't the lowest of the low, but in hindsight, it was pretty good. And our average cost for exit price was about $127. And yeah, and that's what with taking profit near and around 128. And then we got out, this morning near and around 125, average cost about 127 in that range. So up a little over $1,300, which is good. So why did we enter? So we entered because of the sell-off, right? And we entered because of that old support, that previous day's low was that kind of the entry point I wanted to see if it would act as support here. And we had that good wick of buying pressure popped up. And this is kind of why I was excited for this, right? Was right in here. I'm watching this, the last hour of the market session, hit it, and we covered profit. And the reason I covered profit was just because of the pure percentage in money that I made off this, right? I wanted to guarantee profit. Now, I saw this hit, right? And then in the morning, I saw this where we could possibly see a push up, but instead it hit it as resistance and started selling off. So I knew by the time the market opened today, we were most likely going to follow that trend right there. And that's exactly what we did. It ended up rebounding a little bit after hours today, but in hindsight, not that big of a deal. Another reason why I bought it was because the stock sold off down to that 200-day moving average line, which is the heavy support for most stocks and companies. If we zoom back, you guys can see the tendencies of getting some buying pressure there, more buying pressure here. So I had a good indication of we could see a nice move. Also, it was trading for a 32 on the RSI, which the last time it was trading for a 32 was back in this range where we saw a good move. So this strategy was honestly just pure sell-off, with an undervalued RSI, and it was hitting that 200-day moving average line. That's the approach. Now, we also took another trade here on ticker symbol CRM. So CRM here was one of my best, in my opinion, one of my best trades of the month here. So CRM right here was about $1,600 in profit. Okay, $1,600, which is awesome in a single trade. That's absolutely fantastic. And this company's Salesforce. So Salesforce here. One of the reasons I got in is because we saw this. We saw this huge buying pressure. Where if we zoom out, we can see this nice upward trend. In the past year, the stock's gone from 125 to about $368, which is a really, really nice move. We also love moving average lines. So instead of the 200, like we traded Nvidia, we traded this with the 90, which is that blue line. You guys can see where it hit it and we had that good move. But at the time, we didn't see, obviously, all of this. We saw pretty much just like this here. So, we're seeing the stock approach it, and I'm looking at the RSI. It's trading for a 31. At the time, the last point of contact at a 31 was back in here where we saw this good buying pressure. Previous to that was in here where we saw a lot of good buying pressure. So now I'm looking at this and I go, okay, before I enter, I want to wait for some sort of confirmation because we have the upward trend. We have the support. We have the undervalued RSI. The last piece of the puzzle is the breakout. So what I always do here is I go to the hourly time frame because each time frame tells a different story. So here you guys can see here, we kind of saw this little downward trend where the stock kept hitting, hitting this. Let's go ahead and pull this back up. Kept hitting this line. It would hit it and we would sell off, hit it, sell off, hit it, sell off, hit it, sell off. So now I'm watching this and I go, okay, the best entry point would be on the breakout, which guess what, guys? I missed because I took a trade on Netflix. I missed the boat. And so now I'm going, okay, all right, if we can get a trend going in this direction where it pops up above these moving average lines, that's where I will enter. So with CRM here, let's go ahead and show you guys our entry price. So CRM entry price was $332. So $332, right in this range. So by the time we saw this, and this is why being patient is so important. By the time we saw this, right, it already broke out, but it was above moving average lines and it had the trend in this direction. So that's why we took this trade, is because I could enter at that 332 mark. Keep my stop loss about 2%, 2.5% from the current price for a possible push up to resistance up here, which is about a 4-to-1 risk and reward there, which I know you're saying, Carter, what's the big deal about that? This is why. If you guys are starting out with like $500, imagine you guys find over the course of a year, you find 50 stocks with this setup. You risk that 2.5%. with the 4-to-1 risk and reward. And this is why, too, having a trading journal is so incredibly important, because our win rate right now is at 88%. Now, obviously, if I put in our win rate right here, it's going to give a crazy return of $28,000 from 500. That's very unrealistic, I'll be honest. So I think a good win rate for most beginners out there is probably going to be about 40 to 50%. So we'll go 45%. And guess what, guys? With good risk management, you're still profitable at the end of the year. And that's what you got to start looking out for. That's how you become a trader, is these consistent trades where you're maybe only making 1, 2, 3%, but you're only risking 0.5, 0.2%, which is really, really good. So now, one of the reasons I sold out is looking at this here. I wasn't a huge fan of this resistance zone, right? We can all agree that there's heavy amount of resistance in this range. Where it hit it, we had sell off. Just has a hard time breaking above it. And also, wasn't a huge fan of the trend direction, where it started breaking through, pretty much support levels. So, sold out of the trade and made a good amount of money off this. So, guys, I hope you guys all enjoyed this. If you did, hit that like button, subscribe, and don't forget, if you guys want to sign up with Moomoo, which is the broker I am using, click that link. You guys can get up to 20 free stocks just by signing up. So click that link, sign up, and don't forget to sign up with our school. And we also have a trading journal, all that good stuff. So I'll see you guys in there. Hope you guys enjoyed it. Take care.